we're looking at asset-backed finance and why it's such a hot topic in the world of private credit. We're joined now by Akhil Bansal. He's credit strategic solutions head over at Carlyle, where of course we know has a fast-growing credit business. You started this business about 3 years ago. It's now a $7 billion business. How fast is it growing now?
We're seeing tremendous growth in the business, and I think that is being driven by the market opportunity. We're seeing a confluence of factors that is pushing a lot of this high-quality lending off of deposit and taxpayer-backed bank balance sheets and into the private markets.
Is all of this opportunity driven by the banks, or how much are the investors themselves asking for new products here?
You know, I think it's both. One is you're seeing banks and not only banks, but specialty finance companies that originate loans and that we're selling them to community and regional banks. And you're seeing that bid for those loans evaporate. And so you're seeing private market firms, players like us, be able to step into that very large financing need, something that we estimate be on the order of $40 trillion of financing. At the same time, investors of ours are looking to diversify their private credit exposure, get exposure to outside of this private equity ecosystem. I think it's a combination of both.
What about, it's interesting, today alone is a good example of exactly what you're talking about, because you at Carlyle agreed to buy a $450 million portfolio from Suage Financial. Tell us about that deal and what it says about where this market is going.
Yeah, absolutely. I think that's emblematic of exactly what we're seeing more broadly. Suage is an example of a firm that originated a very high quality residential solar loan product. And historically, they were selling that loan product to a bank. That bank decided that it didn't want to buy any more loans. And so Suage was looking for a partner to continue buying these solar loans that they're going to continue to originate. And so that's just one example of many transactions where we partnered with specialty finance companies like Suage, who are looking for funding partners as their existing bank funding partners step away.
You know, when you think asset-backed, on the face of it, it feels safer. It feels like you're backed by a hard asset. But on the other hand, you're seeing a lot of firms like yours look to the asset-backed world and do things against assets that are not so tangible. And so how safe is the asset really?
You know, when we think about risk, it's all about upfront underwriting, focusing on high quality collateral with predictable, consistent, recurring cash flow, and then partnering with the right groups. And we're big on partnering. It's about partnering with banks, partnering with specialty finance companies to deliver this solution and to keep the liquidity going on in the market. And so when you have those three things, and we think at Carlyle, particularly given our broad platform, we have the ability to underwrite all this type of collateral, that's the important risk management you need to avoid losses.
To avoid losses, where are you staying away from at this juncture?
You know, where we're focusing more of our time is we have a thesis that lending to the homeowner is an attractive area. That's why residential solar loans or home improvement loans, even mortgages and second lien mortgages, because that consumer has done very well in this inflationary environment. The biggest component of inflation is the cost of where you live. And the person who owns their home with that 30-year mortgage who has a locked interest rate, they haven't seen the cost of their housing go up, but they have probably seen their wages go up. And so we think that demographic will be more recession resistant and more durable.
Are there places, though, that you would not touch? Because the consumer is an interesting place. To your point here, if you're a homeowner, you have a hard asset. But what about other types of consumer products? You're seeing some places look more at things like credit cards to get more excited about entering this market.
Yeah, you know, for us, it's about, do we have a data edge or information edge about that pool that we can underwrite? And if we do, then we can price that risk and we can underwrite that risk. So that's where our focus is at Carlyle's. Given our broad platform, where do we have some information advantage so we can underwrite that pool? Where we avoid is where we don't have that edge, because then we're no good as any other buyer. And so that's how we look at it.
It's kind of funny because we have this conversation all the time with you guys and your peers about, is asset-backed finance a portion of the private credit market, or is it something separate?
We think it's the new wave of private credit. What is private credit? It's about illiquid, non-tradable directly originated, privately structured investments. And if you look at what asset-backed finance is, it meets each of those criteria. But it hasn't fit the rubric of what private credit has been defined historically, which is lending to sponsor-backed companies. So what we're seeing is this is the new wave of private credit. This is the expanded definition of private credit because it meets all those criteria.
What's the opportunity here? You kind of talked a little bit about one area that you are excited about, the homeowner, for example. What other areas can be of interest to you?
I think another area we're very focused on is C-PACE lending. This is lending against commercial assets to allow them to finance energy improvement and energy efficiency. And that's a broader theme at Carlyle. We're very focused on the energy transition. And so we think C-PACE is another type of lending where ultimately that lending is where you're the most senior piece of capital in those real estate capital structures is a very safe and attractive asset. And once again, you're backed by the real estate, the hard asset, which is also attractive.
And staying senior to the point that you're...
Exactly.
So what about the investor themselves? You were talking about more investors also driving the push into this world. What kinds of investors are these suited for? Yeah,
absolutely. I think if you think historically, a lot of talk has been about how insurance companies have been the big drivers of this asset-backed finance opportunity, and we do think that's the case. There are many insurance companies that are investing in the space, but what we're seeing is now interest growing beyond that, from pension plans, from sovereign wealth funds, and from other institutional investors. And there's two drivers of that. One is, I think in this higher for longer rate environment, investors are realizing that in the investment grade portions of these asset-backed finance structures, they can earn very attractive nominal returns. And then on the lower parts of the capital structure, that's where there's also attractive returns relative to other forms of private credit. So that's where we're seeing demand kind of expand from what was talked about as mostly an insurance kind of asset class now to expanding to other types of investors.
All a part of that global hunt for yield, all amid a banking system that seems to be shrinking. That is Akhil Bansal of Carlyle.